Exchange Traded Funds, or ETF, is the new kid in the investing town who is recently gaining popularity amongst Indian investors. But what is an ETF? Exchange Traded Funds, or ETF, is an investment fund which is a combination of mutual funds and stocks. Like mutual funds, here also, people pool their money together in a fund that invests in different things like stocks, bonds, and other securities. Also, like single stocks, ETFs can be bought and sold on exchanges anytime during the day. Most ETFs are passive instruments and they closely track an index. Being passively managed makes ETF's expense ratio far less than mutual funds. Apart from low cost, ETFs also offer increased transparency, no exit loads, and instant liquidity. As most ETFs track an index, it should not outperform or underperform the index. These are rebalanced when the index is rebalanced. Imagine ETFs as a basket. Now each of these baskets hold a security. It can be stocks, gold, debt, bonds, etc. For example, ICICI Prudential Nifty ETF tracks the Nifty 50 index, which gives an overall performance of stock market. Similarly, the Axis Gold ETF tracks the value of gold in India. There are around 80 ETFs available in India which tracks different securities. There are around 58 equity ETFs which include sectoral ETFs, strategy-based ETFs like value investing ETFs, smart beta ETFs. There are also ETFs which track the performance of foreign stock markets like Motilal Oswal Nasdaq 100 ETF, which tracks the US Nasdaq index. Recently, ETFs are also launched which tracks the real estate prices. These are known as REITs. One of the things that makes ETFs unique is that you can invest in ETF with a fraction of the cost and get exposure to particular security. Let's say you have to buy the Nifty index. That means you have to buy all the 50 stocks present in Nifty, which will cost you about Rs 1 lakh right now. Compared to that, you can buy 1 unit of ICICI Prudential Nifty ETF in just Rs 150 and get exposure to the Nifty index. Amazing, right? Also, if you think real estate prices are going to get really high in the next 2 years and you want to invest in that, but buying a real estate will cost you around in lakhs or maybe even crores, but with Embassy Office Park's REIT ETF, you can get exposure to real estate in just Rs 400. How cool is that? So that was the basic of ETF. But how ETF came into the picture? In 1990, the world's first ETF was created in Canada with objective to track the Toronto 35 index. In the US, the first ETF was launched in 1993 named S&P 500 Trust ETF to track the S&P 500 market index. After that, the ETF industry was witnessing slow and steady growth until 2008 when the global financial crisis happened, leaving all the investors stunned. This was an inflection point for the ETF industry, as the low cost and other advantages of ETFs came in front of investors during this stressful time. After that, the ETF industry has seen an exponential growth. The total assets invested in the global ETF industry reached $5.18 trillion in February 2019, the highest on record. Global assets under management in ETFs has grown at 20.1% CAGR over the past 10 years. Not surprisingly, the US is the largest market for ETFs in terms of asset size and offerings. The most traded stock on the NYSE is not Apple, Microsoft, or Google. It's an ETF called SPDR, which trades $25 billion a day. In Indian investing landscape, the first ETF was created in 2001 when Benchmark Mutual Fund launched the Nifty ETF fund with a defined objective to track the performance of the Nifty 50 index. In India, the ETF industry is starting to pick up its pace. Since 2015, the ETF has not only become much bigger but also more diverse. Assets under management for ETFs has grown from approximately 13,800 crores in December 2014 to more than 1,41,500 crores as of May 2019. That's a 10x growth in less than 5 years at a CAGR of more than 55%. Interestingly, the bulk of this growth has come from the equity segment. Though ETFs has many advantages, yet there is a perception amongst people that ETFs are not liquid, has tracking error, and SIP is tiresome in ETF. In the next video in this ETF series, we will tell you about ETF liquidity, its creation, and the role of authorized participants. So make sure you subscribe to the channel and do give a like and share with your friends if you like the video.